Hello investors, welcome to Investors Central. In this video, we are going to discuss about a new fund offer launched by Motilal Oswal AMC. And the fund name is Motilal Oswal NIFTY 500 Momentum 50 Index Fund. And the NFO period of this fund is from 4th to 18th September 2024. Before going into the details of Motilal Oswal NIFTY 500 Momentum 30 Index Fund, let us take a minute to understand what is momentum investing. The basis of momentum investing is stocks which are going up may continue to further go up and vice versa. Means which are falling down will further fall down. This is the basis of momentum investing. So here we can see buy when markets trends upwards, sell when market trends downwards. So that is momentum investing. Now coming to the presentation, here we have a idiom from Gujarat which is Bhav Bhagwan Che, that is price is the almighty. For momentum, price is everything, as stock performance forms the underlying basis for entry and exit. Stock, if performing well in 6 months and 12 months in this strategy, that stock will be picked in the portfolio. So price decides whether a stock should be there in this portfolio or not. So in momentum investing, price is the almighty. It has no concern with company's underlying fundamental performance and essentially says buy high and sell higher. Buy high and sell higher is the strategy followed in this fund. So this is called momentum investing, friends. Now we are going to see why does momentum investing work. Eugene Fama and Ken French, fathers of efficient market hypothesis, which is very famous, says that premier market anomaly is momentum. Stock with low returns over the past year tend to have low returns for the next few months. And stock with high past returns tend to have high future returns. Now let us check the performance of Motilal Nifty 500 Momentum 50 Index Fund versus Nifty 50. If 1 lakh is invested in April 2005, then Nifty 50 has given 15 times returns. That is for 19 years, 15 times return. The 1 lakh invested in 2005 became 15 lakh 35,000 with 15.2% CAGR in Nifty 50 TRI. That is total return index. While the same investment of 1 lakh in April 2005 in Nifty 500 Momentum 50 TRI gave 76 times the investment value with 25.2% CAGR. And the value today of that 1 lakh investment made in 2005 April is 76 lakhs 74,855. So this is the difference in performance between a momentum fund and Nifty 50, which is the major index of India, of NSE. So there is possibility of getting this return for next 15 years also. It might not happen also because of market conditions. So it is different topic. But it has given in the past, this has happened. Here is another example how the Nifty 500 Momentum 50 Index can catch market trends. So Nifty 50 in 2020 has given 16% return, while Nifty Healthcare Total Return Index gave 58%. At that point, Nifty 500 Momentum 50 Index Fund has 39% exposure to healthcare segment. In the same way, in 2021, Nifty IT gave 62% return, where the fund has 40% exposure to the IT sector. In 2022, 30% exposure in financial services is what the fund have, and 10% return given by Nifty Financial Services, while Nifty 50 gave only 6% return. In the same way, in 2021, Nifty Commodities gave 50% return, while the exposure in this fund for Nifty Commodities is 25%, while index gave 26%. So this is how the fund adapts to new trends, friends, trending themes or sectors. In this way, the fund adapts to trending sectors in the market based on momentum investing strategy. Now let us check risk return profile of Nifty 500 Momentum 50 and Nifty 50. In 1 year, Nifty 500 Momentum 50 total return index gave 75.22%, while Nifty 50 is able to give 28% return. In 3 years, 33%, 17%. In 5 years, 36%, 19%. In 10 years, momentum index gave 26%, almost 26% return, and Nifty 50 gave 14% return. And in 15-year period, Momentum Index Fund gave 23.8%, while Nifty 50 gave 13.2% return. And coming to standard deviation, that is annualized volatility of Nifty 500, Momentum 50 and Nifty 50. 1 year standard deviation of Momentum 50 index is 22.5%, while Nifty has only 12%. See friends, here we are taking extra volatility for extra return. For extra return, we are taking extra volatility. So as we are taking extra risk, we can expect more return also. In 3 year period, the volatility is 20.8%, while Nifty 50 has volatility of only 14%. In 5 year period also, the volatility is little near. There is 22.2% volatility in Nifty. There is 22.2% volatility in Nifty Momentum 50 Index Fund, while Nifty 50 has only 19.2% volatility. So here also volatility of Momentum Index Fund is higher, but it is near to the Nifty 50 volatility because of during COVID period, everything will come in 5 year period. So that's why the volatility is high in Nifty also. For 10 year period, the volatility of Nifty is 17.5%, while Momentum 50 Fund has 20.3%. In 15 year period, the volatility spread still went lower. Momentum 50 has 18.9% volatility, while Nifty has 16.5% volatility, just 2.4% difference. So friends, what I understand from this is, when the period is extending, when the tenure of investment is longer, the volatility will be more or less plus 3 to 5% higher than Nifty 50. So that is what we can conclude from this, friends. And coming to risk adjusted return, basically using the above standard deviation, Sharpe ratio will be calculated. Sharpe ratio for Nifty 500 Momentum 50 TRI, total return index, is 3.3 in 1 year. Above 1 is good, friends. This fund has 3.3. For Nifty 50, Sharpe ratio is 2.2. And 3 year period also, the Momentum Index Fund is higher, has high risk adjusted returns. Even 5 year period, 10 year and 15 years also, the Momentum 50 Index Fund has beaten the risk adjusted returns of Nifty 50, which is the benchmark. So in all the time frames, risk adjusted return of Nifty 500 Momentum 50 total return index historically is higher than the Nifty 50. Now let us check SIP returns of both the indices, that is Nifty 500 Momentum 50 Index and Nifty 50. Nifty 50 in 5 year period has given 21.5% return in SIP, while the same return for 5 year period in Nifty 500 Momentum 50 total return index is 41.1%, friends. Friends, for this difference, the current market value of Nifty 50 with 10,000 SIP per month, 5 years, 5 into 12 is 60. For 60 months, we invested 6 lakhs. 10 lakh 23 is the value today with 21.5% return. In the same way, for Nifty 500 Momentum 50 Index Fund, if we have made SIP of 10,000 since last 5 years, then our investment is 6 lakhs and current market value is 16 lakh 24,340 rupees with 41.1% CAGR, the XIRR. So this is what happened in the past, friends. We can expect more or less similar returns if the index continues to perform in the same way as it has done in the past. And we have seen historical returns also, where historical performance also, where risk adjusted return of Nifty 500 Momentum 50 is higher in all time frames. We are seeing momentum factor performance during different market cycles. In bull market, Nifty 50 gave 27.7%, while Nifty 500 Momentum 50 Index gave 47%. Means there is outperformance in bull market. Now let us see what happens in bear market. In bear markets, Nifty 500 Momentum 50 Index gave negative 42.4% returns, while Nifty 50 gave 38.8%, that is almost 39% negative return. So during bearish market conditions, the fall is more in Nifty Momentum 50 fund. So in recovery phases, what's happening is Nifty 500 Momentum 50 Index gave 39% return, while Nifty 50 gave 34.2% returns. So there is high volatility in this fund plus drawdown, which means fall during negative market conditions is high for this index, for momentum index. So this is what the momentum factor performance during market cycles says. Friends, now let us check the portfolio of Nifty 500 Momentum 50 Total Return Index. Top 10 stocks as on July 31st, 2024 are Trent, Adani, BEL, Bajaj Auto, Mahindra & Mahindra, REC, Siemens, Hindustan Aeronautics, Power Finance, PFC, Tata Power Company Limited. So large cap exposure in this index is 64.02%, while mid cap index is 32.04%. Small cap exposure in this index is 3.94%. And top 10 stocks total value is 45.4%, and remaining 40 stocks will have 55% allocation in this fund. So here sectoral exposure is given. Industrials is the top holding as of now, and 35.71% is the allocation to industrials. Consumer discretionary has 24% exposure, while financial services has 18% exposure. Utilities 11% almost, services 5%, commodities 3%, energy and healthcare. Healthcare has lowest exposure in this fund as of now, which means there is less momentum, but there is momentum in this. Few stocks have momentum in the healthcare segment. So this is the portfolio of Nifty 500. So this is the portfolio of Nifty 500 Momentum 50 Total Return Index. Now let us check the basic details of Motilal Oswal Nifty 500 Momentum 50 Index Fund. So fund manager of this fund is Swapnil Mayekar and Rakesh Shetty. Total expense ratio is yet to be announced. For direct funds, for direct mode of investment, there will be different expense ratio, and for regular mode, there will be different expense ratio. And benchmark is the index itself. This is an index fund, so this fund just tracks the investments of the index. So this is the entire details and explanation for Motilal Oswal Nifty 500 Momentum 50 index fund. So friends, the fund is going to be highly volatile, but high return giving capacity is also there for this fund. So take your decision. If needed, approach your advisor, choose the mode regular or direct, and invest consistently. And all the best. Thank you very much. Thank you very much for watching the video till the end. If you like the video, please do share, hit the like button and subscribe to us for more videos like this.